Hey guys, Akil Stokes here. Welcome back to another episode of The Trading Edge. If you guys are brand new, I'm a Forex trader, trading coach, and one of the co-founders of Tier1Trading.com. And this is a weekly video that I provide to you guys, giving you a look around the markets, showing you what's on my radar for the week ahead. We've actually expanded that a little bit as I've been reaching out on social media, asking you guys what you want to see as well. So it's not only what's on my radar, but addressing some of the questions that you have as well as far as what you want to look for. And I think that's a pretty cool component to it because, again, this isn't just not about me. It's about providing value and helping you guys with any questions you have as well. In today's episode, we're going to take a look at, I believe, about 5 pairs. But I want to start off looking a little bit at the fundamentals because last week was a busy week as far as the fundamentals go, especially the end of last week. May is going to be an extremely busy month, and a lot of traders got burnt on Thursday and Friday, unfortunately. And of course, whenever that happens, I get flooded with messages saying, Akil, what happened? Why did this happen? And we don't teach fundamentals at Tier 1 Trading. We're technical based, but we do teach to be aware of them. And one of the reasons that we were able to stay out of the markets during the end of last week is because we knew what was happening. We didn't know what the reaction would be, but we knew they were these high impact news events that were occurring. And we knew that the best plan of attack is to not attack. Just stay out until the dust settles. So I think I'm going to start doing something like this where I give you guys kind of a quick rundown of what I'm watching for the week ahead. You can go and research it your own. I'm not going to do all that for you, but at least it gives you a little bit of an idea of what may be important on what day of the week. And then you can obviously make your own decision on whether it's something you want to avoid or something you want to trade through. So without further ado, let's hop into the video. As always, before we get started, make sure you hit that like button, subscribe if you're brand new, and do me a favor, share this on social media. All right, so let's hop into our first pair, which is going to be the Aussie dollar. And this was one of the most popular ones from the fan vote. This was actually a pair we've been watching for the last few weeks, looking for that upward trend continuation move. And we've almost exhausted that move. And when I say that, what I mean is that we've almost gotten to the location in which we initially projected. And when you see something like that, at least me personally, I get very cautious about shooting for a longer projection. You know, once price action has gone to where you thought it would go to, then it's time to make the next prediction and think about where it's going to go to next. But there still is an opportunity on here. I would just take a cautious approach, and it's another opportunity for a pullback trade. So the structure I was talking about, if we draw out a horizontal line, is looking left from this location. You can see this was our really previous outside return before this big March drop off. I got to think of a cool name for it because every single pair, I feel like it almost did it. But you can see before that, if we drag this line down a little bit lower, we also put in a new structure high. So for you guys that are familiar on how we read a trend, right, we're continuing that minor inside trend of new structure high, outside return, new structure high, outside return, new structure high, and now price is currently making an outside return. So when we draw out our kill zone, this is going to be the location in which I think you should be looking for buying opportunities. Now, I must remind you, you want to be a little bit cautious because I don't necessarily think there's a lot of room to the upside, but you can certainly take a more aggressive, or I guess more conservative approach with targets and still find some good opportunity in this pair. Now, what's interesting about this is we talked a lot about news earlier and what's on the radar, and this is why it's important that you're grounded in one philosophy over the other when it comes to, hey, am I going to be a technical trader or am I going to be a fundamental trader? Now, I'm not saying that one has to be the say all be all. You don't have to be, I'm technical only, ignore everything fundamental, or I'm fundamental only, ignore everything technical. You can certainly combine them, use them both together. But you have to kind of, have a line drawn in the sand of what is more important, because if you're looking at this from a technical perspective, you're most likely looking, hey, for a buying opportunity. That would mean Aussie strength. If you're reading any of the news out there, there's not a lot of Aussie strength predicted with what's going on in their own economy, with housing and everything, and their relation to China, and maybe this renewed trade war. The Aussie isn't necessarily projected to be a strong pair out there on the fundamental side of things. So if you have that bias, you probably want to stay away from this at all costs. And that's just a good example of how one thing's telling you one thing, the other thing is telling you the other thing. A lot of traders get kind of confused. They get paralysis by analysis where they take in so much information, they don't know what to do. This is why it's important that you have a process. For you guys that were in the live room, gosh, what was it? Wednesday? Give me a second, let me check. We did a great session at the end. I want you to check this out. Live room, Let's see if it was Wednesday. Again, I'm just getting off in a random tangent right here, but I hope you guys don't mind. A good rant, maybe it was Thursday, funny rant on fundamentals. Thursday had to be it. Watch the very last part of this live room session from last Thursday. Lesson on process, because it was a trader, and this was all technically based, but a trader that was looking at so many things that he kept bouncing around from one idea to the other, and it gave him this confusion and never really was confident in his trading idea. So we talked about how to develop a process, what you need. That way you're on the right side of the markets, every single time. So let's go down to Aussie. And what's interesting too, this is again another good pair because it relates to another video here, is entries. If you guys didn't see it last week, I also put out a video here on YouTube talking about trading entries, and we talked about going to more aggressive entries. And this would have been the first place that I would have looked for a pullback here on the Aussie dollar, right? This is that first little, called a pregnant pause, a little minor level of structure right at the high of our kill zone. And once price action got to that level, this would have been an awesome opportunity to look for an entry reason. Now, unless you're very aggressive, if you're using anything other than anything past on the aggressive to conservative scale, a single candlestick formation for entry, you wouldn't have gotten involved because you never have that confirmation. So this is a good example how a very aggressive trader probably would have been stopped out the trade by now. A very conservative trader never would have got that confirmation to enter. But what we're looking at here is, again, your entry reason somewhere in this kill zone. You can see we do have an RSI swap, meaning that the RSI went from overbought to oversold directly. I like that. This is the area where you're looking for your entry reason. You can use any of the tactics that we teach you. I would just caution you and say this, right? You guys know how I trade. I would not take an approach where you're shooting for an extension, where you're shooting for the market to extend higher, just because I believe that we've already made the move that we expected to move. So if you're going to look for targets, I would look for a retest of previous structure highs. If this chart happens to retrace lower, I would even look for something like this, right? Because we know that a lower retracement typically means a weaker trend, right? So if we're going to get a weaker trend, we're probably going to get a weaker extension. And if this is indeed going to be a reversal, this is going to be kind of the last leg of the move, the third drive, and before we reverse, there's a good chance that a reversal may come in the form of a head and shoulders pattern. So if we do get a deep retracement, that would end up creating our neckline. Perhaps a good level to look for those initial targets would be the projection of the right shoulder instead of the projection of the head. So decent opportunity here at Aussie dollar. Like always, it's in the kill zone. So right now we would be in wait and see mode where you're sitting back, you're in that zone, you have maybe some RSI confluence. Now you're just looking for your specific entry reason to get involved. And then you're obviously taking this time to measure out entry or stops and targets and making sure everything meets your risk profile. Next up is the Euro Aussie, and apologies for the deep voice. I just felt deep on the first one. It's early Sunday morning for me, so haven't had breakfast, haven't really had anything to eat, certainly haven't had my coffee, so voice is a little bit more bassy than usual, but I wanted to get this video out for you guys. And you guys in the UK, it's already afternoon, almost, so I don't want to make you wait too late. But Euro Aussie, man, good pair. This is one that has done exactly what we predicted. If you watched the video last week, we called for that low and tight flag. We called for that breakout. It broke out further than what we anticipated. So good move, and hats off to all you guys that made some profit on that idea. What we're doing now, and this is another Aussie pair, is we're retracing back into structure. And again, I'm not looking necessarily for a trend continuation trade. We're back in a very kind of boring, methodical level of consolidation. So I'm not all too inspired to project that we're going to continue all the way down there without running into a few obstacles. So rather, again, the counter trend trader in me is looking for what type of short-term move can we have next. There's that beauty of a low and tight flag. It doesn't get any better than this. Look at that. So I'm looking for structure trades. I'm looking for a chance to I'm looking for a market to come up to this decision point, this previous level of structure resistance. And at that decision point, the market's going to make a decision on what I should expect next, right? Two things can happen here. From a counter trend perspective, we can hold structure and we can look for some type of short-term reversal. Again, if you want to keep a secondary target on for the bigger move, I don't think there's anything wrong with that. But look for some type of hold here in a structure-based counter trend move at I guess counter trend, however you want to call it, a structure-based trade here at previous structure resistance. But if that level of resistance is broken, then we look for the opposite. Then we look for that violation, right? Resistance turns to support. We look for that pullback, and we look for the opportunity to continue higher to our next level of structure, which is a little bit ambitious right here, but right around this, right below this this 178 even level. So good opportunity here on Euro Aussie. We don't know which is going to be which yet. Again, we are predictive in our analysis, reactive in our execution. What you should be doing is planning for both. Market is massively overbought right now. Again, if you guys are new, the RSI is a relative strength index. It's not a reversal signal index, right? It doesn't mean the market is going to reverse. That was pretty clever, Gil. Doesn't mean the market is going to reverse. It is actually a measure of strength. So the market doesn't go overbought unless there's a lot of buying pressure in the market. The market doesn't go oversold unless there's a lot of selling pressure in the market. So what we're looking for the RSI is not to give us a signal that, hey, it's overbought, we should sell. No, it means exactly the opposite, right? Not exactly the opposite, but it means that there's a lot of strength in the market. Maybe we should hold off on selling. But what you're doing is you're anticipating. You're saying eventually, imagine throwing a football in the air. Eventually, it's going to hit its apex and even out, right? So start being on alert where price action can come to before that little bit of relief happens. So decent area here on Euro Aussie. Certainly one on the radar for the week ahead. All right, next is Pound New Zealand. Again, this is one I rarely look at, but it was on the list. The viewers wanted to take a look at it, and it's actually not a bad opportunity on here. So we're going to take a look at two different perspectives here, and we'll start here on the daily. And let me know if you guys see anything, right? Obviously, there's a lot of consolidation. This is a horrible looking chart with these massive wicks left and right. But within that junk, within that consolidation, I'm giving you clues right now, do you see anything that could be potentially forming? Well, we could have a potential advanced pattern formation, right? If we look at this being our X leg right down here, and this being our initial swing, if I can grab it, swing low to swing high, you're gonna see that price action after moving up like this, zoop, comes down and retraces to our 50% retracement. Once we hit that 50% retracement, we know we are on alert for a very particular advanced pattern formation called a bat pattern. All we need is the rest of our requirements. We do come up, we get our C leg requirement, and what we would need for a bat pattern completion is a move back down to this 886. So first and foremost, if you're someone that is a pattern trader looking for a longer term move, check out this level on the Pound New Zealand Daily. This is a massive pair of a massive ATR, so keep that in mind. It's one of the reasons that I don't look at it. But that is an advanced pattern formation down here on the daily. Now, even if you're not an advanced pattern formation trader, this can be helpful, and I'll show you why. If we just mark off where this zone is for the pattern completion, right? Our 886 down to our X leg, right? We drew a little bit lower as well for that little structure blip below it. If we mark that off and kind of delete the drawing tools that are on here, we can go down to the lower time frame, the 4 hour, and see that we also have kind of a trend continuation trade setting up. It is a trend continuation trade, again, because the movement is so junky. It's not a grade A setup by any means, but still all the requirements really hit, right? You can see after price action moved up here, right, we kind of came down. We had this solid level of support where the market found it about 1,000,001 times and held it 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 and held it, and then boom, it finally broke. How annoying was that? It finally broke, giving us that lower low, lower close. And again, if you follow the process that we teach in trading, IPDE, identify, predict, decide, execute. Once you identify that lower low, lower close, then you can predict a continued move lower. Now, there was a little bit of a retracement, a nice V bottom here, which is a very strong retracement. And that brought us right back into previous structure, very similar to what we're looking at on the Euro Aussie. Now, what's interesting here is that after we came to this previous level of structure, we put in a doji candle, this kind of spinning top looking deal, which is a sign of indecision, right? You can see there's a big wick to the upside, there's a big wick to the downside, and there's the body in the middle. So buying pressure tried to push it up, selling pressure tried to push it down. At the end of the day, it kind of ended where it started, essentially. But after that, and this is what's important, after that we did get a lower low, lower close candle. And that's a good confirmation of selling strength. So if you want to be aggressive and just sell it off of this lower low, lower close, right? Again, we talked about that in the video I put out on Thursday. You've got yourself a situation where stops need to be above the highs, obviously above this previous level of structure. You got yourself a situation where a very conservative target would be right here. This is that little, if you guys can see, it's like I call it a pregnant pause. I don't know where I got that from. Probably Jason Stapleton, but a little bit of just a pause in that bearish move. See how we're going bearish, 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 and it's a little bit of a retracement if you were to look to a lower time frame. That's the first level I'd be cautious about, just because that level, if we look left, lines up with the previous level of support. Obviously, at this point, it's not going to give you a risk reward, but we'll kind of talk about that later. Other levels I would shoot for is down here, or retest the previous structure lows. Obviously, that's going to give you a nice risk reward, almost a 2-to-1. And then, of course, that bat pattern completion that we identified on the higher time frame, putting you right down here. That's going to give you over a 3-to-1 risk reward. There may be some confluence there as well. If we just take a Fibonacci extension from this last swing high to swing low. Let's see what that is. It's going to be right in the middle, I bet. Oh, yep, 127 a little bit higher, 1618 a little bit lower. So you got a little bit of Fibonacci influence before that or above that. If you're someone that's into fibs and you want to make that adjustment, I would actually adjust this above the even handle, 201s right there, just to be a little bit cautious. But those are three ways you can look for it. Now, if you're someone that's conservative and you're saying, hey, Akil, I don't want to fight off this structure level right here, and that's going to give me a inverse risk reward. Well, what's something that you can do, right? We talk about having alternate approaches, right? You don't have to trade this lower low, lower close. You could, if that's in your plan. You always want to follow your plan, which brings up a good point, right? I got a message. It was a little bit of an annoying message. It was really an annoying message this weekend, and this is the second time I've gotten, I believe, from the same person where the message said, Akil, where's the video at, right? First of all, if you want to piss me off, that is the best way to do it. Do not complain about free stuff. Do not complain about free stuff, especially when I'm taking 3 hours out of my weekend and time with my kids and sleep to do this. That's the first thing. But I'm used to that. That's the internet for you. What's more disturbing is that even after this comment, I said, hey, don't be rude. And he's like, well, Keo, I didn't mean to be rude by it. But, you know, I use these videos to get ideas or something like that. Not get ideas. It was something more than that. Give me a second. I actually want to read this to you because it's important for any new traders, because we had a conversation about it this week where we were talking to our group in our group in our Monday Q&A session about different avenues you can build your business out of in trading, and one was coaching. And we made very sure to separate coaching from signal services because there's a direct conflict in doing the two, right? Coaching, a signal service is giving someone fish. It's saying, hey, here is the food, you know, I'm going to fish for you, just take the food and you pay me for delivering the food for you, right? Coaching is different. Coaching is teaching someone the skill of fishing, right? I'm not going to give you the fish because if you rely on me, you'll never be able to do anything for yourself. So here is how you fish so that you can do it yourself. Now, I'm not saying one is better than the other. It all depends on your personal preference, right? Not everyone wants to trade, but people want to make money off the market. So there's nothing wrong with that. A signal service is really, it's very similar to having someone manage an account for you. A little bit different, but very, very closely. But in the coaching perspective, and I believe in coaching, and that's why I don't have any signal services, I believe in teaching people how to fish, and I don't think you can do both. So I was a little bit upset by the comment I got where it says, I'm sorry, dear brother, but I'm saying normally because I'm always following your instructions. And I hope that didn't mean that I'm following trades, because I don't want you guys following trades. That is the worst idea you can do. That is the easiest way to go broke. Because although you think you know what you're doing from these videos, you don't. Trust me, you don't. You can ask any of the members on the platform that actually come in and get the training. You don't. Yes, you're getting educated, right? I think these are very valuable as far as education goes. But it's not enough to go out and just be a successful trader. Becoming a successful trader takes a long time, right? A long time to learn, a long time to practice, a long time to back test, and a long time to get over the psychological elements, which are the most crucial part to get over with. So it offends people to think that you can shortchange the process by just following people's ideas or just learning in a day. So please, if you guys are new, right, I hope these videos are helpful. I hope you're learning something. I hope you're able to take what I'm showing you here today and have it benefit your trading. But please don't come in here with the intention of just, I'm going to watch Akil's video and then take every trade that he talks about. You're going to lose money. If you're going to do that, you might as well go to a signal service. So sorry for that rant, but you guys know how I get by now. So another reason, another way you can take advantage of this if you're shooting for more of a conservative target is wait for a double top, right? This is going to be a more conservative reason for entry. If price action comes up and gives you a double top right here, that's going to give you a higher entry. And we don't know where that entry is going to be. It all depends on where the double top completes. But let's say we get right here. Those stops aren't going to move too much. They're going to be in the same place. What it does is give you more on your reward side of things, and maybe that stretches it out to a 1-to-1 risk reward. So there's always an alternative way to enter. You never have to force a trade. If something doesn't meet your rules, you don't take it and you just wait for another option. If you get that other option, you take it. If you don't get any options and the market just runs down, it's like, hey, I just move on to the next trade, right? You can't lose money if you're not involved in a trade. That's very important. So that's pound New Zealand for you. I think I have one more after that. All right, guys, I lied. We have two more, and one's going to start with gold. But before we get into it, do me a favor, hit that like button, hit that share button as well. That's the best way you can support what I'm doing here. If you're brand new, make sure you subscribe. Very important. Make sure that notification bell is hit, right? If you miss any of my videos, like the trade entry video this past week, it's probably because you weren't subscribed. It was probably because you didn't have that notification bell hit. So you don't want to miss out. Have it hit. That way you're alerted each and every time I put out a video. Also, feel free to use that comment section, right? If you have a question about something we talked about, if you have an alternative opinion that you want to share on the market, maybe you're looking at something else that I missed, that happens from time to time. I miss opportunities. Type it in that comment section below. Also, if you just want to say, hi, good video, great to see you, any of that stuff, feel free. Believe it or not, that comment section is a great resource for traders. Many new traders have asked questions on there, and even before I have a chance to respond, there have been other traders that come in there and lend them some advice. So it's a great resource to use and take advantage of it. It hasn't been too trolly lately. I think the trolls avoid my channel now because I don't give them any attention. So you don't have to worry about a whole bunch of spam or anything like that. Now gold, this was another request, and gold is interesting. Initially here on a daily, right, looks like we're kind of in no man's land because we've broken previous structure highs to the upside, but very important if we kind of get a bigger perspective of this on the weekly, excuse me, and don't pardon the crying baby in the background, right? We actually have a level of consolidation here. So we're not in no man's land necessarily, but we could go higher. So you want to take that into account when you do the rest of your analysis on gold, because what we're looking at here is really either two things. You can look at this as a double top, right? It is technically a double top. It's not a double top I would be interested in because we've come back to test previous structure lows. You guys know how I get about that. You can also look at this as the potential start, or I guess the confirmation. We have 4 touches of a wedge pattern, right? So if we kind of look at connecting the dots here, connecting those highs and connecting these lows, right? We have a wedge pattern starting, a consolidation pattern. And typically what happens in these consolidation patterns is the market starts to contract. It coils. Imagine squeezing a spring tighter and tighter and tighter. And eventually what happens? Boom, it breaks out one direction or the other. Now, this is a tough one, again, because if we were in no man's land, this would be a clear breakout to the upside. We could actually look at this as a pennant pattern and look for a higher breakout. I do think we can break higher, but I wouldn't be super aggressive about it because of where we've hit structure-wise. I certainly wouldn't be super aggressive about breaking out to the downside as well. So because it's not in the best location, and you guys know me by now, the what isn't as important as the where. All that means is you need to take a conservative approach, right? So instead of, looking at your trading plan and saying, hey, here's my aggressive way to get involved in a breakout, look for a conservative approach, right? Wait for the confirmation, wait for price action to break out one way or the other, and then look for that retest. Obviously, if you do have a set bias on which way you think the break's going to happen, you can take that aggressive approach and positioning yourself prior to the breakout, right? There are three ways typically to trade these patterns. One is prior to the breakout. So like if you're looking to get long, you try to position yourself here at the lower trend line and you get involved before that big break. It could be during the breakout where you position yourself, on one side or the other or both if you want to bracket the markets, and whichever way it breaks out, boom, you're kind of filled as that train takes off from the station. And then the most conservative approach, in my opinion, is the retest. So you look for the confirmed breakout, you then look for the retest, and then the extension after that. And I guess there's a more conservative way of trading breakouts as well. We won't get into that, but I guess that would be a fourth option. But look for consolidation here. Look for a potential breakout. I have no idea which way it's going to happen. If I had to guess, I would say bullish. But I would certainly wait for confirmation before placing any type of entry, simply because of where we're at based on the weekly. We are at a higher level of structure, so this move could be over. All right, so our last pair, or index, I guess, is going to be the DAX here. This is a pair we haven't looked at in a while, I think since the Ascension event, which, believe it or not, was just about a month ago. Man, I feel like it was the beginning of the year since we did that 4-day workshop, but it actually wasn't too long ago. But to review that, what we were looking at is a continuation. So we can see that we most recently got a higher high, higher close, not only above this level, but if we look left at this structure level, we got a higher high, higher close above that as well. So I'm looking for continuation. Our next stopping point is going to be right here. Now, I would say this, if you look left, there's a little bit of inside structure that exists lower. There is more down here. Let's see where this inside level comes. Right, that's what we're currently spiking off of right now. But outside structure is always going to be more important than inside structure for me. So I think it's definitely still worth taking a shot up to this level. Let me just see if there's any Fibonacci confluence here. I'm looking at this for really the first time here. And let's see, look at that, 618. Yep, 618 right at the low of that kill zone. So nice little confluence there. This was the 50% at this other level. I certainly think we can continue up. And this is going to be very similar to the Aussie dollar we looked at, where if we go down to the 4-hour chart, this is a pullback trade. It's almost exactly familiar how we have our minor level of structure right here. This is going to be your most aggressive place to get involved in the trade, looking for that continuation up. And then we have our bigger kill zone, which is going to be from here to here, where you can look for reasons for entry. So pullback traders, this is going to be an opportunity for you. And again, just remember, if you saw the live room on Thursday, we had a good conversation about, hey, if you're going to be a trend trader, you have to be okay taking multiple opportunities. Obviously, you can set it up where you only take one and have your very large stop loss, but there's also chances where, hey, you got to take a shot here and you're wrong. And if you're wrong and the market gives you another signal, guess what? You've got to take it again. That is just the life of a trend trader. If you don't like it, don't be a trend trader. Again, risk-wise, it doesn't really put you in any of a different position than having a big stop loss. But mentally, it can take a toll on you. Again, taking multiple losses and still needing to retake a trade when you just lost a few times before that. That can be kind of taxing. But again, that's what goes into the decision process of figuring out what type of trader you want to be. And that's big. In Monday's Q&A, we're going to talk about, I got a question about, hey, Akil, how do I go through the course for the second time? Because the second time is really the golden time, right? I always say that the first time going through the course is just a learning experience. You're a sponge on the wall. You're trying to take in everything. You're obviously learning the foundational elements of technical analysis and price action, but you're taking a look at all of the strategies. You're taking a look at some of the trend continuation strategies we teach, some of the counter trend trading strategies that we teach, the pattern strategies. You're just taking a look at it. You're not making a decision, but you're trying to get an idea of, hey, what fits with my personality and also what fits with my livelihood, right? If I work all day, I probably can't be an active intraday trader. So maybe I have to do something like a daily chore where it's once a day. But you're trying to figure that out. The second time through, that's where you're really locking in. That's where you're really saying, hey, okay, I think I know what type of trader I want to be. I think I know what type of strategy I want to focus on or build myself. Now, as I go back through the course material, I'm looking at the same material I learned, but I'm looking at it through the eyes of a blank type of trader. And that just gives a massive amount of perspective. And again, we'll talk about that. I hope I didn't ruin it. We'll talk about that more in Monday's Q&A. But very important when you know, thinking about stuff like this. Can I psychologically handle these type of moves? So speaking of the Q&A, I've been getting a lot of questions about this lately. Many of you guys have signed up for our trial membership, which is awesome. You get a lot with the trial membership. You get access to a course or two. You get access to the live trading rooms, the trading edge videos, our software, our accountability sessions. One thing, however, that you don't get access to is the Q&A session. Again, just for you guys that are going to go on to ask that question, hey, Keel, how can I hop into Q&A? Unfortunately, you can't until you're a premium member. And again, we want to keep that small group purposeful. We don't want to flood it with trial members. No offense with our trial members, but it's more of a serious session when it comes to trading. So we want to make sure people that are in there are very dedicated to what they're doing. So anyway, enough about that. You guys have a great rest of your weekend. I'm excited because it's Last Dance night. I got a podcast coming out tonight talking about the Michael Jordan mindset in trading. So check that out, the Trading Coach Podcast. And I hope you guys have a great week. May is going to be very big as far as the fundamentals go, right? So remember, you don't have to trade off of news, but be aware of it because sometimes staying out is the best move that you can make. All right, see you guys.